Okay, so here we are on March 7th. This is the Scalper strategy, and I'm using it in the futures market right now. It works for equities market, day trading, different time frames as well, 5 minute, 15 hour, 4 hour, 30 minute. I've used it for a bunch of them. I've used it I've checked it out and everything. So including Forex. So I've done it in Forex markets as well. So it seems to work for everything, every ticker, everything. So different tickers give you a little more success than others, but for the most part, it's a winning strategy with all of them. So pretty nice. So here we are. We have we have a switch and we have a red dot into this candle. So we're going to short that as soon as it closes. Right now we're on the 5 minute candle. So we got about 2.5 minutes left, and then we're going to go ahead and short this trade, and we'll show you what happens. So basically, we're just looking to get a 50% retracement on a short or a long. Anytime this happens, we're looking to get a 50% retracement. Sometimes we get 100% in plus, but 50% is what our primary goal is. Everything after that's bonus money. Overall, the market seems to be gapping up tonight. This is Sunday night, so futures market. Okay, got a minute and a half. We'll come back at you. Okay, so we got about 30 seconds left. So what happens here when we do this is once this algo switches, so from here red to green, if the ball is inside the candle, indicates a trade. So now we're going green to red, ball inside the candle, red ball inside the candle, telling us to short this when this candle closes here in 15 seconds. Then once it shorts, we're going to look for a 50% retracement, and we'll pop out. And if it was a long play, it would be the opposite. We'd be switching from red to green ball inside the candle, and then we trade it. Okay, so we're going to short, sell, 3, 2, 1. I don't have auto on. Okay, so there we got our retracement in. So I'm going to open this up a little bit so I can get my stop proper. So that's the main stop is here. If it boosts, 79. So I'm just going to come up here with this. You can see the line on the chart right here showing you where I'm at. So I'm going to go ahead and click that just above. So I got my stop in. So if I want an exact 50% retracement, I could take my tool here. Could do it with the Fibonacci as well, but just do this. And then this middle line right there. And then if I really want to, usually it happens pretty fast, so I don't have a whole lot of time. There's my target right there. So put my prices in. Okay, so yes, my stop is starting out to be risking 2 to make 1, but we don't always make 1. A lot of times we'll make 2 and 3 and more. So, but that's the minimum that we're looking to get. And then we'll talk about the trade as we get into that, and we'll see what happens. If it really slowly comes into this, then we're just going to take that and get out. If it smashes through, we'll put our stop in there and give it a chance to continue to sell off. Okay, so right now we're trading, the ticker we're trading is the Canadian dollar futures, the ETH on that. So as you can see here, we're hitting our full target now. So this is a full trade right here. Normally I would be taking everything off the table or putting my stop in. So if it backs up, it gets me out. So I'm going to let this ride though, as I said, with all these red candles too. 1, 2, 3, 4, 5, 6, 7, 8. We're definitely getting a green candle soon, which is great because I'll be through here. I'll get the green candle. Hopefully it's a small green candle, and I can start showing you how I exit trades once I hit full targets based off candles. Because once I got no more targets, then I need to have a good reason to get out of the trade. I don't want to get out because I'm afraid I'm afraid it's going to back up. I'm afraid I'm not going to make money or whatever. I want to get out with some kind of statistical proven probability of success. So I developed a different way of getting out once I've got all my targets met. And so I'm going to show you on this trade once we start to see some green candles pop in. I'll explain it to you then and show you the exit strategy. Now the exit strategy I'm going to show you doesn't work on every trade. It's not something I would just pull up a chart and just trade it. I've only proven it based off of my algorithm setups, and when certain things happen within the algorithm, then this exit strategy works really, really well for me. We'll see. Right now it may cost me money, but typically it works well. So the first thing I would do is once we get some reds that close below this level here, I would put my stop, or even right now, I'd put my stop right on my target. And then if I got lucky and it kept running down, then it gives me an opportunity to switch to my candle exit strategy. Either way, I would normally lock in my profits of my full trade so that these full trades can pay for the losers that will happen later on. But for this example, just to make sure I'm going to be able to show you something. Here, look, I got two things on there, not good. Just so I can show you this example, I'm going to let this run. I'm not going to put my stop in here just in case this candle backs up because I really want to show you this example. And they don't happen often, so that's why I'm going to take advantage and just show it to you here regardless of what happens. But again, I don't just trade it on any chart. I only trade it off of the algorithm setup when it's gone through my targets, and then it's allowed me to start trailing a stop based on candles. So typical place you'd expect to bounce right here. Close of yesterday, right around the open of today. Typical resistance. So we'll see if this thing is going to turn around or if it's going to roll over and start a sell-off. Okay, so we got a green candle in there. That green candle was not above the red candle. So we're waiting for a green to close above or the red candle before it. And then once that happens, we'll talk about what we do next. Okay, so while we're watching this trade play out, for those of you who are new to the futures market, I'm going to show you something here. So if you click on Thinkorswim, you click on the little thing, you come over to futures, then you see the ticker, and then it shows you this window right here. So this is how much it's going to cost you for the one contract. And then for every 0.00005 that it moves, it's $5 win or lose. So then you look over here and you have your 79120. Basically, for every time this clicks a 5, it's $5 right here. So on the futures market, it moves very different than the equities market as far as how you calculate your risk reward and how much you're going to make per trade, right? In the equities market, like for every dollar, if you one share you have, for every dollar it moves, you make $1. But in the equity on the futures market, it's very different. So if you're going to get into the futures market and play around with it, make sure you understand your risk, because for every $1 you move, it's a lot more. Like for every $1 this moved, it would be way more than $1 profit, win or lose. Now this is only a 79-cent piece here, so it's not moving dollars. But yeah, just so you can see, even for every 10 cents it moved in the equities market, if you got 100 shares, 10 cents is $10. But here you have 100 shares, 10 cents. That's a lot of zeros away. That's big money you're talking. So you can blow up your account real fast. So just be really careful in the futures market. Make sure if you're going to explore this, that you understand this. Understand how commissions will affect your win and loss, because commissions can be expensive in the futures market. So if you are, if your commissions cost you $5 round trip and you're making, $10, then you're really only taking home $5 because of commissions. But at the same time, if your risk reward is 1-to-1, if you're looking at, losing $10, you're actually losing 15. So now you're risking 15 to make 5. So does it even make sense? Like all those other things into your risk management plan, you have to really take into account when trading the futures market. And I talk about all this over at the website. Link is below if you're interested in taking my futures trading course. It's free. I don't really get into the details of futures market and all the ins and outs of how it works and all that. Other traders out there do a much better job teaching that, like Adam Koo or Adam Co. But for me, I just teach over there my algorithm and how I trade the futures market. It's not a class all things futures. Definitely Adam Co is awesome. And in my futures class, I do have a link to his education over there if you want to go over to his site and really learn about futures. And it's all free. A lot of his stuff is free. So definitely worth checking out. You can hit him up on YouTube too, Adam Co, and check it out. But anyway, so yeah, futures. If you're looking in the futures, you're watching this video and you're like, oh, I'm interested in checking out futures, I should play with that. It's a little bit more complicated than it looks, but it's not that hard. It's easy to learn. It's just some stuff you need to know about so you don't get yourself in trouble. With Thinkorswim futures account, you have to get it turned on, activated. It's not automatic, and then you have to apply for it. And then if you have certain accounts, won't allow you to do futures. So if you have a joint account with somebody like your spouse or whatever, they won't, at least when I was doing it, they wouldn't allow me to have that account be a futures trading account. So I had to set up a separate futures account for that. And there's just some different things like that that are required in order to have a futures account with Thinkorswim. So if you're thinking about it, check it out. Play in the sim. The sim's actually pretty good for futures, unlike the equities market. But the sim for futures is pretty good, so you can check it out. Equity market sim with Thinkorswim is awesome if you're swing trading and you're like working with daily candles. But if you're trying to trade on the minute, 2 minute, 5 minute, not good at all. But they do have a cool feature where you can do on demand and basically replay a stock from what it's been doing, and you can sim trade that way, and that works really awesome. But anyway, so just some info on the futures market. And again, once we get a green candle to close above a red candle, we'll talk about how we start to look at our exit. Just going to draw this line on the chart to make it easy to follow for the purpose of this talk. Let's make it blue. Let's take the price off. All right, there you go. So once we get above that, and I'll just trail that along the red candles so you can more clearly see what's happening. And you can see why I don't like to just hit flatten. I always like to give it an opportunity to run, so that's why I always wait. And I put my stop in and then give it that chance to run. A lot of times I just want to get out because the trade's just not working out. Like right now, all this, we're in consolidation. We're hitting this support level again. Like I just want to flatten my trade. But if I just hit flatten, then I miss out on all these other opportunities. So I always try to just hit it, put my stop in just above. And then if it backs up and I get out, cool. But if it keeps on running, then awesome. Like right now, normally I would have my stop right here below this area. And I would leave it there unless the candles told me to get out, which is what I'm about to show you. But I don't have my stop there now because if this backs up and boosts through, then I'll just be out and I won't be able to show you this candle exit. So I may give back a bunch of profit on this trade just to show you this candle exit, but it's worth it to me to show you this candle exit because this may help out some of you if it works in your strategies. Or for my students who will be taking the Scalper course, which if it's not up there when you're watching this, it will be up there soon. This will be pretty valuable to help you maximize profits. So the nice thing about having this exit strategy is the whole time right now you'd be wondering, when do I get out? Should I get out now? Should I get out now? Is it going back up? Is it hitting support here and it's going to go back up? Should I get out? Like you'd be asking yourself this the whole time. Oh, look how much money I'm making. I should just get out. But when you have like a nice exit strategy, whether it's a stop loss strategy or a profit strategy, it takes a lot of the stress out of trading because if you have a proven probability, a statistical proven probability of success, you know what the numbers game is. You've played it backwards and forward. You've simmed it. You've traded it, especially after you've been doing it for years. It takes a lot of the stress out of trading because I can just be content right now that, hey, I might make a lot more money in this trade. This trade could turn into a $500 or $1,000 trade, or maybe I only make $80 on it. It doesn't really matter to me because at the end of the year, I'm making a lot of money. So it's easy to not stress out about giving up $40, $50. Yeah, there's still a part of you that's like, oh man, like I made a mistake on last week with that swing trade. I should have made another $600 on it. But yeah, I mean, sometimes you'll still afterwards be like, oh, I could have made that extra $200 or $300 or whatever it is. But at the same time, it's easy to quickly remind yourself that at the end of the year, you're making a lot of money. You look at your trade plan, you look at your scaling ladders, and you're like, yeah, I'm good. And if I'm not making enough money that year because my trade plan shows me I'm not going to make enough money, then I need to figure out my plan and what's realistic. Or maybe I'm not trading my plan well, and I need to figure out how to trade my plan better. But I don't stress about it as far as losing, leaving money on the table, getting out early, getting out late, and all that stuff, because at the end of the year, I'm making the money I need to make. So it helps a lot of traders to have a good exit strategy. Highly recommend it. What's your target? What's your stop? And then if something goes better than expected, then when do you get out? What does that look like? So have that plan already ahead of time so that when you end up in that trade, that's just an epic trade, you'll have a strategy to be able to get out and really capitalize on it and feel good about your exit. So like candles like this that are not red or green, I don't move my stop. It stays right on the red candle. Dojis and anything like this, I just leave it right there on that red candle. When this candle closes, though, we'll be moving it to the top of this. Okay, so we got a few seconds left before this candle closes. So what we're going to do now, since we got a green above red, is we're going to draw a line going across to the next red candle. Dojis and doji-like candles don't count where there's no color. So it'll be this candle here. So we're going to move our stop. Whoa. We're going to pull. Oh, come on. We're going to pull our stop down to a break of this candle. All right. Oh, I can't because of the spread. We're almost there. All right, cool. So that's where our stop will be then. So now once we break this candle, which is pretty much, we're pretty even with it right now. And you can see my stop. So once we break this candle, we'll be bouncing out. So that's how I exit when I've already hit my targets. And I'm like, when do I get out now? I do it just like that. We get a red candle. We get a green above red. I draw a line going across to the next red candle. And I put my stop just above it. And then if I get out, I get out. I'm happy with that. There's a good possibility this is going to be turning around. And if it does just get me out and then rolls back over, that's okay too. Because I know a lot of times when I do this, it does turn around and it ends up being a really great place for me to exit. What's a bummer though, sometimes will happen is you'll get like your little green, you get your red candle here. And then this green candle will be like way up here. And then I'll draw my line over. And I'm like, man, I'm giving away all that profit, right? But typically when I do this, my stop is here. And I'm going to, if it does become a huge green candle, then I get out at my full trade. So I never sacrifice my full trade, but I may sacrifice a huge part of that profit on the downside if it ends up being a massive green candle boosting up. So sometimes that happens and it's a little bit of a bummer, but all good because going back to the plan, as long as I got my half trade or full trade, I know I'm making a bunch of money at the end of the year and it's all good. So now we're going to get a red candle in here. So if my stop is basically, my stop's not going to change. It's going to stay there. If this red candle closes below the green and then we get another red candle, then I'll start moving my my lines again. So hopefully that will happen so I can show it to you. All right, cool. So now we have this big red candle. So hopefully we'll get another red that'll be below this one. And then I can start trailing my line again. Until I get another red candle below this one, then this exit stays here. So I'm not waiting for a green to go above this red now. And, you know, next thing you know, this stair steps and it's like way back up there. This is not moving upward. It's only going to trail downward to get, you know, for my stop out, I guess you could say. All right, so there we go. So we're stopped out of that trade. Trade's over. Take our 130. So a pretty nice trade that turned out to be. Going to zoom back out so we can look at this a little bit. So pretty nice from an entry up here to an exit all the way down here. Pretty sweet. So what would happen sometimes is this would start to build a base like this. And then this would roll back over. And then we'd have a red candle that would be down here. That would close below these. So then I would take my blue line and I would move it back down to the top of that red candle. And then if a green popped above it, then I would do the same thing. Draw my line over again, move my stop, and stuff like that. So I was hoping to be able to show you that extra step, but didn't happen this time. So hopefully it will happen on the next time. And yeah, if it does, I'll bring it to you. All right, cool. So let's put that in the log. Okay, so I just entered that trade into the log. So for those of you who are using my trade log, you can see here 6C, short. Those are the numbers. One ticker, $130. You can see how I calculated that $130. Whereas the MES, it calculated it correct for like 36 or 27. So, and that's with this multiplier that's over here, futures multiplier. So on the MES, it's a 5 is what I need to do. And on this particular one, it's 100,000 is what the multiplier is, so that it works out correctly. And that multiplier is based off of, let me show you. I'm going to show you on the MES. It'll be a little bit easier to see it. So again, I go to my futures tab, MES. So for every 25 cents it moves $1.25. So basically my multiplier is 5 for the MES. Because for every dollar this moves, it's going to give me $5. So I put my multiplier in at 5. So 5 times whatever that number is ends up giving me $5. So that's kind of how I work out the multiplier so that it always gives me the proper thing for every dollar it would be moving. So just something to think about if you're using my log. That's how I do it. Hopefully you understood that. And if not, and you're trying to do this, shoot me an email. And if I have to, I'll get on a Zoom call with you and help you go through it. So, all right, cool. So let's go back over to the log real quick. Okay, so we got that on the MES 5, and it works out to the right price. 100,000 works out to the right price. Then I'm just gonna put my commissions in 5, and then I always put in here what I'm doing. So Scalper. This is Scalper 1. All right, cool. I have 2 Scalper strategies. That's why. So Scalper 1 is what that is. And yep, all in the log. So hopefully we get some more of those in. That'll be nice. I mean, this week's already starting off in the right direction for March. Pretty sweet. So we've got 1 week down, going into the second week right now. We're already building this pretty nicely. So a lot more green. I like all green. I can't believe we had a red week here. But all good. I want all this to all be green. Never want to have red weeks. Red days, that's common. Red weeks, not so much. But if you're not trading every opportunity, sometimes you only trade on the losing day and you don't trade on the winning days, and then that's what happens. So anyway, cool. All right, everybody, bring you the next trade. All right, so I'm going to call it a night right here. So just recap on this trade. So we jumped in right around here, and then right here. That was our first target. Made it through there, survived their second target. And then I showed you my exit strategy based on the red-green candle setup. And then sure enough, we end up getting out right here. And look what's happening, right? So it worked. We got out the right spot. It's rollover and it's going back up. Sure, of course, wish I got out right here at the very bottom, but that's just not realistic. Once in a great while we get lucky and we get some trades like that, but it's not realistic. So here we are. So we're out here. We'll take our $130 for the night. And then tomorrow we'll hit the day trading market, maybe pop in the futures market a little bit and see if we can bring some trades to you. All right, everybody. Have an awesome night.